So at the age of 35, you became financially free.
Yes.
27, you started investing.
I started with a 8,000 rupees SIP. I still consider that my best investment is something called as you cannot create a lot of alpha in mutual fund. Between 12 to 20% is what you can aim for. You have to go into stocks, especially in the Indian growth story.
So the government says that the inflation in India is 2 to 3%. But the audience who are watching this podcast right now are in the top 1 crore people of India. If you had to gander a guess, what would be the inflation?
Not less than 8 to 9% for any middle class that you're talking about.
Look at an average Indian. Majority of their capital is in their house growing at 6-7%, FDs growing at 5-6%, and jewelry, which was pathetic and now it has grown because of war. Is it like mathematically they're going to go on the streets by what you're saying?
They're going to lose money
Because of their bad asset allocation.
Hence, they need to start in.
Oh my God.
One thing is important that India is the place to be. You have to stay invested in India no matter what.
We keep bragging about our young population. The only advantage India had was labor arbitrage. Like, what is the point of having cheap labor if AI is cheaper than our Indian cheap labor? 40% of our population is under 30. But if there is no jobs for them, where are they going to make money? All right, Dr. Vinny, thank you so much for coming on the show.
Pleasure.
So, Dr. Vinny, you are somebody who is a professor of finance at the Delhi University.
Mm-hmm.
How old are you today, if I may ask?
I am 40.
You're 40.
Yes.
And when did you be financially free?
It's been 4 or 5 years.
So at the age of 35, you became financially free.
Yes.
So you teach finance, you talk about investing and all of that to students who come to your university.
Yep.
So the government says that the inflation in India is 2 to 3%.
Yeah.
But I think that inflation is for the whole country, where there are 150 crore people.
Yes.
But the audience who are watching this podcast right now are in the top 1 crore people of India.
Yes.
So for this top 1 crore people of India, if you had to gander a guess, what would be the inflation? How would you compute that?
Thank you for bringing up this question, Sharan. The latest figure says it's around 3%. Okay, now the base year had been changed to 2024 and that really helps. But the general consensus of inflation is much, much higher. You look around, rents in the last 3-4 years across India has risen very high. You look at education, you look at travel, all of them are growing at a much faster pace. So if I have to give a number to it, on an average, I would say it is close to 8-9%, not less than that. And that's, again.
Look, so you're saying for the middle class of India,
yes,
the actual inflation is 8-9%.
Absolutely. Look at education. An IIM Ahmedabad fees is growing at a much faster pace. You travel. Okay, I was on a holiday, and last time I went to this Taj hotel, I was paying 7-8 grand per night for a hotel room. Now you go, you don't have anything below 10, 12, 13,000 rupees. So if you see all of these things in account, and everybody has aspirations, social media gives those aspirations. We need to travel. We need to have those things, those premium things. So inflation for us is not less than 8 to 9% for any middle class that you're talking about.
So, but when I do my computations for the future, for those people who are not able to beat 8% post-tax returns, what are they going to do? Is it like mathematically they're going to go on the streets by what you're saying?
They're going to lose money. They're going to lose money, absolutely. Hence, they need to start investing as soon as possible. They need to start investing from day one because inflation that we see, the number, the headline inflation is not the real inflation for a middle class person. So they need to beat that inflation figure. They need to make real rate of return needs to be much higher.
Like if I look at an average Indian, now, while we can be proud of the fact that India now has 20 crore demat accounts, but the matter of fact is that for 99% of them, less than 10 to 20% of it is actually deployed in mutual funds. Right? Because the majority of their capital is in their house, which is growing at 6-7%.
True.
And then they have FDs, which is growing at 5-6%.
Right.
And their jewelry, which until now, until 5 years back was pathetic, and now it has grown because of war.
Yes.
So blended, if I see for an average middle class person, they're probably growing their money at 7-8%.
Yes.
Post-tax, to be optimistic.
Yes.
Because of their bad asset allocation.
Yes.
So even if they get 7 to 8%, they're breaking even. Meaning they're not getting richer.
Yes.
Which means if you're just breaking even, you will always be stuck in the middle class. Because you're growing money by 7-8%, but you're still where you were before.
Agreed. That's the reason the per capita income of Indians is not rising very, very fast. If you see, you put it rightly, the average amount of mutual fund investment per person in India is 3,150 rupees. That's the number. That is 3,150 is the average investment. We did 30,000 crore of SIP last month, but still the average is 3,150. So imagine rich people are putting in more money and the average is still very, very low. So we need to put in more money towards equity. That is where money will be made. Yeah, so asset allocation needs to be much higher in terms of other asset classes. When I say other asset classes, you need to have equity in your portfolio, and that is what will make you money. So I need to tell you one thing very, very interesting. Now, one thing is important, that India is the place to be. You have to stay invested in India no matter what. India is the fastest growing economy. You look at what's happening across the world right now. Finally, US was able to listen to India in terms of tariffs. We did not go back to Trump, sir, hamara tariff kam kar do, nahi. Trump came to us. What does this show? The importance of India at the global level is increasing. Why? Because we are growing very fast. Everybody knows India mein to invest karna zaruri hai. India mein to paisa ban raha hai. So India mein invested rehna hai. There are a couple of ways how you can participate in India rally. One, you start a business. You make money, you start a business, you can grow money. Or second, you invest in that business. And how do you do that? You go and buy stocks in the equity market. That is the simplest way to do it. And again, coming back, wo kaise karna hai? Either you go and buy stocks, if you can do that, if you have the time, if you have the knowledge, or the best route, a passive route, is through mutual funds. So let me take you back to my journey of how I started investing. What is happening right now, Sharan, if you see in the market, of course, the amount of mutual fund SIP is increasing. It's increasing at a decreasing rate right now. But what is happening right now is people who've been investing in the last 2-3 years, they're going out, right? People who've just started investing, they have never seen the market fall, at least after COVID. So what they're doing, they're getting anxious, they're getting out. Oh, mere se to paisa nahi banega. Market mere liye nahi hai, there is something fancy. So what they're doing, are they getting out? In order for these people to stay there, I always tell them that पहले थोड़ा ना पैसा बना लो. When I say बना लो, have it anywhere. PPF में रख लो, FD में रख लो, arbitrage fund में रख लो. Keep some money to bank upon. कल को ये ना हो कि if you need a little bit of money, you go and sell that mutual fund. You will never be able to create that wealth for yourself. So before you start your investing journey in mutual funds, again, SIP is a little different. But how many of, a famous fund manager, and that fund would be almost in all the portfolios, said that my mutual fund fact sheet created around 18% money on a CAGR basis since the time we launched. But how many people were there who really made 18%? He could count on his fingers. So people don't stay invested. It's not that mutual fund don't make money. We go for the best mutual fund. Mutual fund लीजिए वो जरूरी है, best वाला बाद में देखेंगे. So have some money. I also had that buffer. I started thanks to my father. He created a PPF account. I started investing in debt first.
Sorry, was that IDFC mutual funds? What you said? Was it
Parag.
Parag Parikh? Who they started? When did they start?
It's been a long time. FlexiCap, the famous Parag Parikh FlexiCap.
The FlexiCap fund you're talking about. Yes. Okay. You're saying that since the inception,
it's around 17-18% they have created wealth for people.
And you're saying very few people stay.
Very few people. It's very difficult for people to stay for 15-20 years. And that is the problem in India. पैसा तो बना रहे म्यूचुअल फंड में, कितने लोग बना पा रहे हैं, वो रहते ही नहीं है, तुरंत भाग जाते हैं इधर-उधर. Because there are so many of us telling them कि यार ये फंड अच्छा, ये फंड अच्छा, ये फंड अच्छा, they quickly run away. Yeah. So now I started with that. Let me talk about my asset allocation first. And I think that will help you to understand how I started my investment journey. So I have around 50% of my money that I've made in mutual funds. 15% would be around in direct stocks. Give and take 10% would be in debt. 12 to 15% now in gold because the value has increased. So 12 to 50% gold, and the rest 12 to 15% is what I call as play money. That play money is also called as sometime tactical allocation. People call it satellite portfolio, different names. But I keep that play money to put it wherever I feel or wherever I think the money should be put. For example, I put it in silver. And so I played silver tactically. I don't keep it as an asset class for myself. I play it tactically because, there's a lot of big drawdowns in silver that can happen. Suddenly silver can go up, suddenly silver can come down. So I keep silver as my tactical allocation. I keep buying and selling silver as and when I get. So when I get an option, I keep buying and selling silver and similar asset classes with my play money is what I mean. So tactical allocation or a satellite portfolio helps you to create that alpha. If you're experienced enough or if you are tracking the market on a regular basis.
So when you started investing, what was your first SIP?
I started with a 8,000 rupees SIP in a large cap index fund.
This is when you were 22?
This was when I was 27.
27, you started investing.
Yes.
And what was your first job salary when you started?
My first job salary was 4 lakh rupees. 4.5 lakh rupees, honestly.
Annual.
Annual income.
This is at the age of?
24.
24. So 24 you started working.
Yes.
It took you 3 years to start investing.
Yes.
And then you started...
No, so I started investing in SIPs after 3 years. I told you, right? SIP was not my first love. I did not start with SIP.
You started with PPF and FDs.
I started with something called as, and I still consider that my best investment, is something called as tax-free bonds. Something which gives me 12% return still, pre-tax. Right? And fixed. म्यूचुअल फंड में आएगा नहीं आएगा पता नहीं है, उसमें मेरे को 12% प्री टैक्स मिलता है, मतलब 9% का इंटरेस्ट इज क्रेडिटेड टू मी.
So who's giving this bonds?
These bonds are not issued anymore, but I had this bond company called as PFC, Power Finance Corporation. 8.9% tax free return मेरे को आ जाता है. So as I told you, I have 50% in mutual funds, so in that 50% mutual fund, I have a very simple philosophy. Okay, mutual fund simple होना चाहिए. अगर mutual fund simple नहीं है, तो मैं direct equity choose कर लेता हूँ. So in mutual funds, I have a 50% allocation towards, 40% allocation towards large cap, 25% allocation towards mid cap, and 25% towards small cap. That's like 90%. I'll come to 10%. So large cap, as I told you, I started with my a large cap index fund. Okay. But off late, in the last couple of years, I have not increased my SIPs in the large cap index. I'm playing it through flexi cap now, because flexi cap are de facto large cap only, if you see. And they help you to generate some alpha because they have international holdings also in them. So now my whole of large cap need is met by the large cap index fund and a flexi cap fund. Okay, that's 40% of my equity mutual fund. Now come the mid cap. Now I think that's very, very important because mid cap has been one of the more top performing in the last 3-4 years after COVID. So for mid cap, I have one single fund, and because mid cap space is not a lot of stocks, so I keep one good mid cap fund that helps me like 25% of my alpha generating, which generates alpha for my portfolio. But for small caps, I have two. Okay, why two? Because universe is very big, and one very important thing is I want to capture different investing styles. Okay, so I go for 2 small cap funds and not 1 small cap fund. Now this is my core portfolio. I don't tinker a lot of with this portfolio. This helps me to grow my money. One interesting thing, and the 10% that I told you was left, is I do BAF, or a balanced advantage fund. Okay, now why that? That's my, let's say I want to splurge. Okay, and I want 4-5 लाख चाहिए, मुझे निकालना है, मुझे कुछ लेना है, ठीक है? So I use this BAF. I don't use it often, to be honest, but I use this BAF. Why? I don't keep emergency fund. This is like my emergency fund. Why is it so? Because यहाँ पे ना tax नहीं लगता है. In a BAF, the setting is like that कि 65% would be in debt, 35% would be in equity, and वो debt portion पे भी मुझे equity का tax देना पड़ता है. Hybrid fund. तो इस पे tax नहीं लगता है. And 1.25 lakh profit tak I don't pay any tax on it. So it's basically I'm taking out money whenever I want tax free, and I don't take it often, right? So I just plan it accordingly that this money I take it out tax free, and then I keep my portfolio same. So this is my SIP mutual fund portfolio. Apart from this, I also have a lump sum mutual fund portfolio. Now what's that? That is where my play money comes in. In that, I have an international fund. Earlier, I was bullish on the US market. Now I've switched in the last couple of months to the China market. And then I have 1 or 2 sectoral funds. Now, depending on how I see, and this is wherein, you know, the different alpha, the extra return I'm able to make is, I see in the market what kind of sectors are working well, and I deploy capital accordingly. So this is my lump sum investment, no SIPs in it. 1 or 2 sectoral funds, and 1 international fund is what I go for. And currently for international fund, I've chosen China. So apart from that, I told you 15% of my money goes into the equity, the stock market, the equity market. Now therein where I try to play and create extra alpha, let me talk about one of my investments. And you know, I always tell people when you're investing in the stock market, it's not that difficult. You need to just look around what's happening. I got Bharti Airtel around 450 rupees.
Okay.
Couple of years back. Currently, Bharti is around 1800, 2000 rupees. Such a big stock. Money can be made in big stocks also. We just run after small cap, mid caps.
So you made 4x in 2 years.
4.5x in 3-4 years.
No, but how much conviction do you need to have? Because a lot of people will have your logic in their head. If I just put 1 lakh rupees, it's not going to make a meaningful change in my portfolio.
Absolutely. You have to have some concentration. You have to have some meaningful bet. You need to have some skin in the game. So I have around 8 to 10 stocks in my portfolio at a particular point of time. I don't go overboard. Okay. I will have, let's say, so I at least need to have 10 to 15% of my allocation in a particular stock. That's meaningful return for me.
10 to 12% of your overall portfolio?
Overall equity portfolio. Okay, overall direct stock portfolio. I have in those 9 stocks. Okay. So give and take. So I need to have some meaningful skin in the game. Let me give you one more example, and that should really open up the game. One stock, and I'm talking about a stock which gave me 23x. Yeah, this gave me 23x in 4 to 5 years. My buying price of this stock was 138, 139 rupees. This stock is currently trading at 3,000. The market was still falling. It has still not fallen much. The market has fallen over 6, 7, 8, 10% during the wars. The stock has still not fallen much. It's still almost at all-time highs. It's around 2,900, 3,000. Can you guess the stock?
Oh, which one is this?
No? The name is BSC, Bombay Stock Exchange. It's the only listed exchange in India.
You said it became 22 times.
22, 23 times. 138, 139 is what I bought.
So essentially, if I have to make an assumption here, if 15% of your portfolio in direct stocks, which let's say is equally divided between 8 stocks. So about 2% of your overall portfolio is going into a single stock. Now, if this single stock became 22x for you in 4 years, it now ends up becoming half of your portfolio.
Exactly. And
it becomes half of your overall net worth in 4 years. So, oh my God.
This is where I made my money. Okay. My consistent wealth creation, most of the people who tell us that they have, let's say, 5 crore, 10 crore, 20 crore portfolio in mutual fund, mostly haven't generated that money from mutual fund. They have put a lot of capital of themselves, and they're generating around anything between 13, 14, 15% ex-higher return.
Right.
Okay. The capital is the primary source of money in the beginning, and they make their money somewhere else. Right. Here, I made my money, let's say, in stocks. Somebody makes their money in XYZ business. Okay. They need to make money, substantial amount of money here. You cannot create a lot of alpha in mutual funds. Yeah, you will be around between 12 to 20% is what you can aim for. Okay. But if you really have to make that alpha, when I say alpha extra return, you have to, let's say, go into stocks, and depending on what kind of investor you are, you should have some exposure to direct equity as well, especially in the Indian growth story.
So what is the methodology that I should follow for direct stock investment? Because you're right, mutual funds, I cannot expect 30, 50% CAGR.
True.
When you are talking about 22 times in 4 years, I don't even know what the CAGR is, right? So how do I go about doing this direct stock picks?
I have a simple philosophy. Okay. Everybody wants to be a top-down investor. Look at the country, look at the industry, look at the sector, and look at the company. But most of the people become opposite, a bottom-up investor. किसी दोस्त ने बता दिया एक stock, अब वो stock को research करेंगे, अच्छा वो sector चलेगा, क्या India ठीक कर रहा है? They go the opposite way. We want to do it the top way approach, but we go up bottoms up. What I follow a mix of both. Okay. One of my ways to look at it, I look for monopolies in the market. Very difficult to find monopolies. Agar nahi hai, to I look for duopolies. Like, if you've seen both my stocks, which have given me return, I talked about, have been in a duopoly market, almost a duopoly, right? BSC, NSC, Bharti Airtel, Reliance Jio, fading market share of others. If a company has 40, 50%, 60% market share, others are very small, I still call them duopoly, right? Because others are fading away. So one of the ways is look at a company which has a moat. What is that company doing different that others are not doing? That's also a very important thing. Does that have entry barriers? Okay. Having said all of these, you eventually have to go to their balance sheet. Eventually, you have to go into their profit and loss statement. But I always believe cash flow any company, for any company to succeed, the cash has to be rich. The company needs to generate a lot of cash. BSC, in my case, was generating a lot of cash. And they had their money to deploy into the technology. They had the money to expand. So I always look for good cash flow, rich cash flow in a company when I'm looking for a good, decent stock that I want to buy.
So how do you sort of start filtering these companies? Because most of these stock screener apps or platforms don't have filter like monopoly, duopoly, and all of that. So how do I know which are these monopoly, duopoly companies in the country?
See, you need to be so what I do is I am a rigorous reader, okay. But if you have to follow an approach how to find these companies, you have to first of all find out sectors in the economy, okay. That is the basic way for anybody to go for it. You need to find out which sectors are working.
So what are these sectors? How do you pick sectors? Because there are more than 10 sectors. So
there are more than 50 sectors.
So how do I pick the right sector?
So let's talk about a couple of sectors that I believe that can do really, really well, okay. If you look around again, Sharan, these are very, very simple ways to do it. You don't have to go into these screeners also. Okay, you don't have to go into screeners. You have to look around what's happening. I told you I was traveling recently. Earlier, what used to happen when I was a kid, we used to have these summer vacation holidays. अब क्या होता है? हर 2 महीने में holiday करना है. You look at Instagram ना, सबको call it a social media effect. But every 2 months, people are traveling somewhere. So this gives me an instant hit कि hotel companies which are arranging these things, the travel companies, okay, and let's say an airline stock. There are a couple of airline stock. These are direct beneficiaries of the hospitality boom in India. Second sector, any IT company which is going the AI way in India is a value buy today. You really think these guys don't know what AI is? You really think they're not preparing for AI and everybody around the world know about AI? That's not happening, right?
Yeah.
So some good companies in the IT sector or maybe mid cap can give you really, these are a time when you buy good stocks. These are a time when you create portfolios. So I think IT is giving you a value buy currently. Hospitality, IT, these are two sectors that people can look into.
So according to IT and hospitality.
Yes, that's to start with, yes. One more trend, let me talk about it, is premiumization. Every third car which is sold in India, close to that, I read a statistic recently, has a sunroof. यार हम तो अब तो गर्म देश है, हमें क्या sunroof चाहिए? तो यूरोप का concept है. Premiumization is increasing everywhere. You see sneakers being sold. You need clothes being sold. You need car being sold across. Premiumization as a trend is increasing. You need the hotel sector everywhere. So companies which are into the premium sector, which are doing those premium things or creating premium products is again a theme to play upon.
So I understood the theme. But how do I apply the next filter of monopoly duopoly? So you mentioned hospitality. What monopoly duopoly is there for hospitality? Like how do I go about putting that next filter?
Tell me, Sharan, which company strikes you when you talk about hospitality or hotels?
I mean, Taj, ITC,
Taj,
Marriott.
Taj has Taj is one of the biggest player in India. I don't know if people know. Taj goes by the name IHCL in the stock market. That's a Tata company. That has a very big market share in India. Even if you're not able to find monopoly and duopoly in the hospitality sector, you are still able to find a big elephant here. Right?
So what is the definition of a big elephant? Like market share percentage, is there any thresholds?
Market share. I'm not comfortable with a market share of 10% in the market. That's very competitive for me. You need to find, let's say, something meaningful. For example, 30 to 40%. Again, this is not investment advice, but Maruti has around close to 41% market share.
That's like a big
big chunk. And Maruti is currently at 100% operating capacity. Maruti is currently at 100% operating capacity. Maruti has a new plant coming up in April 2026. And this is because Maruti is not able to supply its product because
too much demand.
Too much demand, capacity full hai, too much demand because the GST rate cut. And so imagine what happens. In April, a new plant comes up. A big company like this should be able to expand its market share.
So coming back to hospitality, let's take Taj.
Sure.
Are these cash-rich businesses because the margins are not that great in the hotel business, right? In the hospitality business, 5-star hotels, I don't think the margins are that great compared to a tech business.
Correct. But IHCL is different. IHCL has an asset-light model. IHCL has So IHCL and Oberoi are two premium segments in India, two premium hoteliers or hotel companies in India. how do these companies increase their revenue and profits? One, they get more rooms, right? IHCL has been acquiring a lot of hotels. Okay. Second, they start charging more for the same rooms. So either they set up more, they have 100 rooms, they set up 10 more rooms, they get more revenue, or from that 100 room that they get more money. So earlier it was 10,000 rupees. Let's say an average revenue per room was, let's say, 10,000 rupees. Now it is 15,000 rupees. It's straight away a 50% jump. And this is where a premiumization segment trend comes in.
Yeah.
You know, if more people are willing to pay more, they are premiumization, they are building it up, they are bringing the premium elements, and this helps to increase the bottom line. देखो premium में क्या होता है ना, margin ज़्यादा होता है. You buy a Relaxo का चप्पल, it will give you for 50, 60, 100 rupees. You will not get a lot of margin for a Relaxo company. But you buy a 1,000, 2,000 rupees campus shoes, therein where the margin lies. So premium gives you better bottom line percentage or better margin contribution.
Okay, so let's say I found the sector, I found the duopoly, monopoly, and then what do I look in the financials? You said good cash flow. Is there any thumb rule over here? What should be the cash flows percentage and all of that?
See, it depends on sector. What are you analyzing? For a steel company, it'll be different.
We'll compare with the benchmark of that sector.
So I also believe that the new age companies, when I say new age companies, the recently listed companies, all the loss-making companies, because the rule changed by SEBI in the IPO market, that the loss-making companies can also list now. These companies got listed. Now, some of these companies, I believe, have come to a point that they can deliver now. Okay. Let's say you're talking about Swiggy and Zomato. What happened to Zomato? If you remember, in somewhere in 2021, Zomato got listed. Okay. After 1 year, it came to 40, 45. That's the low of Zomato. Suddenly, when Zomato showed profit, when Zomato became profitable, it started giving you the try. It went up to 300, 350 rupees. That's the Zomato high. Yeah. If you look at Swiggy right now, Swiggy is around 280, 290 rupees. Should be that level. Swiggy is not profitable right now, but you go and see Swiggy started stopping its loss-making businesses. Okay, I believe the moment Swiggy turns profitable, you can see good growth in Swiggy. Okay, so again, a duopoly, there is the third player, a Zepto there, which is a unlisted company, right? A Zepto is also then the same 10-minute delivery, and new companies are coming up. Big Basket is trying there, Amazon is trying there. But accord, two listed companies, big players, Zomato and Swiggy. I believe Swiggy can give you good returns if it turns profitable, it is able to deliver, and there's a lot of competition. But again, the same concept as you talked about, duopoly, monopoly, good return if they turn profitable, and these, because they have scale.
Yeah.
It's not easy for any new company to start doing this.
The moat is there.
Yes.
Barriers to entry is there.
Absolutely. But having said that, there's competition in terms of Amazon, in terms of Flipkart minutes, but they are small and they have the first mover advantage. So I think the moment they turn profitable, you will see, and you're getting good values now. $290, $280 for Swiggy.
What's your thought on this trend of instant house help? You must have heard of Snabit.
Yes.
Which is growing at an unprecedented pace.
Yes.
15 minutes you will get a maid at your home.
Yes.
What is your thought on that?
3 companies, but I have a Snabit, a Poronto, and Urban Company.
Urban Company is the first mover.
Yes, the listed company. Again, the only listed company. Now, abhi kya hoga na? They will burn money, and all of them are burning money. Urban Company bhi burn kar raha hai money. But I think this is a trend to stay. This will create a lot of money for them. मेरे घर पे हर दूसरे दिन में there is a Urban Company help who's there. It is so convenient, and this is the need of the hour. We are trying to, this market was untapped, and it was the need of the hour for somebody to come in and help. We press a button for $199, for $179 an hour, 2 hours. Somebody comes, somebody's professional, doesn't question you, ye kaam kare, nahi kare, and does the work and goes.
Yeah.
So I think this trend is there. Be ready to pay a little more going forward once this cash burn stops. But I think this will be really good for companies which are listed in this space.
So you're saying Urban Company is also an interesting company to look at?
Can be. I don't see there is any other listed player which is there in this space, and which gives it an edge, basically.
But when you make an investment, let's say we did all this research and identified a company. For what time horizon are you looking at? Because today's people's patience levels are really little, very small.
Yes.
Right? I mean, I made an investment, let's say 3% of my overall portfolio, and then I see that there is a 10% drop 3 months later. So what should I keep telling myself in terms of what should be the investment horizon when I follow this strategy?
See, I like a line: buy right, sit tight. Buy only when you have conviction. Just don't go and buy. Don't go and if you see, because of these new age apps, it has become very easy to buy and very easy to sell also. People quickly buy, people quickly sell. That's the problem. You need to have conviction. पहले क्या था, मेरे पापा को ना फोन करना पड़ता था डीमैट वाले को, अच्छा ये बेच दो, फिर एक चालान भर के देना पड़ता था. That's for the deterrent. It is too easy to buy and sell today. So I think when you have conviction, then only buy, and you need to wait.
So then that building that conviction is really important because it tests you every day.
Absolutely.
Every day I'm reading the news, and every day my conviction is being tested. Some new rule comes, some new war happens, and I'm like, will my company survive or not? Should I keep my money here or not? Should I pull it out? So it's a very tough thing to do.
That's noise for you. You need to ignore the noise. And if you have conviction in a stock, then you need to...
Okay, I think the question to ask is, when what happens, should your conviction change? Because if the noise is noise, let me know what is not the noise. What is golden information that I need to be on the lookout for to ensure that my conviction still holds true. Obviously, going through the quarterly statements is one thing.
Yes.
But beyond that, anything else I should look at?
Couple of things. One, something major happens in the company. Let's say promoter ne fraud kar diya. Happened in Blue Smart, right?
Yeah.
Promoter ne fraud kara.
Then don't tell me about that. I invested in it.
Oh, really? Yeah. So promoter ne fraud kara, and then you need to get out of it. No, any fraud word in the market is like the biggest red flag. The FIIs, the BIIs, everybody hates the word fraud. Some macro change happens. For example, oil at $120. What will happen? Any tire company. What will happen? An airline company, 30 to 40% of the operating cost is oil.
Yeah. Margin starts shrinking.
Yeah. So if you think that will sustain, अगर लग रहा है $120 अभी के लिए है, दोबारा वापस आ जाएगा, that's okay. But if you think that it will sustain, you have to get out of it. Some big macro change or something bad happening in a company, you should get out of it. Hence, equity market is not for everybody. Okay. Hence, you need to go to the passive route and give your money to experts who will manage the money, who track the market. That is mutual fund for you. If you don't have the time, if you don't have the expertise, if you cannot track the market news about a stock, hence I keep 8 stock portfolio. I don't keep 20 stock portfolio because I cannot track 20 stocks. So 8 stock is easier for me to track. Okay. But hence, if you don't have the time, don't go for stock investing.
Yeah.
Stick to the mutual fund route.
Right.
Yeah.
How do you look at your international investing strategy? Because that is now another trend for Indians. They are like, dollar is at 92 rupees now. I'm getting poorer. Next time my Europe trip will be very expensive.
Yes.
I want to now take my money outside India. So how do you look at that?
The property price in China is down 42% in the top 4 cities of China.
Okay. Why? 42% drop?
Yes. And it is, it's been over a couple of years now.
I wish that happens in India.
I doubt that'll happen, but yeah, both of us wish that.
So that I can finally buy.
A lot of people are waiting for that, Sharan. But if you go to the smaller cities, it has fallen much more.
Okay.
Having said that, the government is looking for people to make money somewhere. Okay. They don't have an SIP concept there.
Really?
China doesn't have an SIP concept. Why I'm investing in China right now, one very important figure I'm looking for is, I know the property prices are falling, there is deflation in the economy, there is a lot of oversupply in the market, बहुत सारा product पड़ा हुआ है. $24 trillion is a retail deposit in China.
What does that mean, retail deposit? Money kept in...
By the money with the retailers hold in banks.
Wow.
Yeah.
24 trillion.
Let me give you an interesting fact. Out of this, around $7 trillion is due to mature this year. Okay?
Mature from what?
Fixed deposit. Let's say an instrument similar to fixed deposit.
Okay. How much is that number in India, if you know it?
So Indian economy, if I have to give you $4 trillion is the entire stock market. They have $7 trillion coming from the banking sector.
Wow.
Hold on. This is getting interesting now. 3 years ago, this FD was done. Let me call it FD. At 3.5% return. Current that interest rate is 1.2%.
Sorry, repeat that. 3 years ago?
3.5% पे पैसा उन्होंने डाला बैंक में.
Okay.
At 3 years ago. Now that will mature. That maturity, if they put it back again in the same deposit, that's 1.2% interest rate.
So they'll not do that.
Even if 10% of that money comes to the market, which the government is channeling, $7 trillion.
This is the government's way of funneling the retail money into the capital markets.
And one more thing in China, generally there has been a pump and dump. बड़ा bull run आता है, market गिरता है. This time the government is trying to maintain that somehow. बड़ा नहीं गिर रहा है. In last year, China gave you a good return. This year, China has not given you a lot of return. But I think that will change very soon. This money coming in, the government stance changing, because the government wants people to earn money somewhere.
Because they're
Profit is
saying
not.
the US citizens are also putting money in their capital markets.
Yes.
So that's how it's helping their companies.
And they want something similar to SIPs there. They want something similar. So much money with for people. They're impressed with how Indians are channeling their money. 30,000 crore rupees. This is what is stopping our markets to fall from the last couple of years, right? So they want something similar. So hence my bet on China right now, because I think a lot of this money will flow into the, let's say, through the ETF route, the mutual fund route in the market.
I think India's FD cash pile is, so the Indian retail investors FD cash pile, from I had read something about a year back, is approximately 6 times the mutual fund investment amount. So I think right now mutual fund investment amount is about 30-40 lakh crore. About the total number of money invested in mutual funds of all Indians, 30-40 lakh crore.
Yeah.
So if I take 6 times of that, it's about
200.
2.4 crore.
Yes.
So what is that? 2.4 trillion?
A trillion is 12 zeros.
I think 1 lakh crore is 10 billion. 10 lakh crore is 100 billion. So 1 crore is 1 trillion. So it's about 1.2 trillion.
Okay.
And you're saying in China, this number is 7 trillion.
That's the amount that's coming up for maturity this year.
For
the
maturity,
amount is 24 trillion.
Oh, that amount is 24 trillion. It's going to come to maturity.
20 times what India has then, as per the calculation that we did.
Sorry, India's number would be about 2.4 trillion. If
Then
it
it's
is
10 times.
10 times bigger. So the FD amount in China is 10 times bigger than the FD amount in India.
The retail deposit.
Retail deposit.
Yeah. Now that can be in the savings bank, that can be in the FD. That money is there in the banks, in the system.
Most Chinese people, I think, they are accustomed to investing in real estate. They invest a lot in Dubai also. They're the second largest buyer.
Exactly.
Dubai.
So, and the real estate is around 42%, 50%, let's say in smaller cities, which is the way out. They need to make money. Bank mein paisa ban nahi raha, that's around 1.2% return now. So they have to channel their money. And that is the government way of putting it to the equity market. And I think that should give you good return going forward.
Good, I put some 2% of my money in China.
That's great.
As part of my satellite portfolio.
You did?
Yeah.
That's nice. Yeah. I've been also doing that since a couple of months now.
So why don't they invest in India, Chinese people?
One, it's not easy to invest in India. The government...
Gift City is coming up.
Gift City is coming up. The first IPO came up. They will start investing in India, of course. But the retail side of Chinese people generally don't invest in India. It is the companies which were investing in through the FDI route, which the government stopped of late. And they're again coming back. They restarted recently. But I think they prefer to go to the US instead of coming to India.
Right.
And if the Chinese money starts coming in India, I think we'll have a hell of a bull run.
So you're saying you're still bullish on India. India is still going to do well in spite of, our currency depreciating against the dollar. Like a lot of people are now not sure about the India story. And there are obviously two sides of people. One side is like, India is the future, this, that. But there is also one camp who's like, India is not going to continue to do well because the only advantage India had was labor arbitrage, which is being taken away by AI. Like, what is the point of having cheap labor if AI is cheaper than our Indian cheap labor? So I'm like, how will India do well? I mean, we keep bragging about our young population. 40% of our population is under 30.
Sure.
But if there is no jobs for them, where are they going to make money? The entire economy will crumble. Unless everybody becomes a plumber and goes back to farming.
Yes. See, AI is definitely a threat. Okay, it impacts the IT. IT people have a lot of Bangalore wipes away. The real estate sector, real estate sector of Bangalore just go away. All the IT people are in Bangalore. But having said that, you really think AI will take up all the jobs? No. I think India's story is very well intact.
Because, have you watched this podcast of Nikhil Kamath with the CEO of Claude?
I saw a little bit. Not
the Dario.
Yes.
He's saying a tsunami is coming. That most people are still thinking that nothing is going to change,
Mhm.
but the tsunami will hit and nobody knows when the tsunami will hit. And when it hits, the whole world will change.
No,
That's the narrative from him.
yes, I saw this cup. I had a drinks of, I saw a little bit of the video, and I agree to that. I'm not saying AI will not change things, but I think we'll adapt. Same happened in 2000, same happened in 2008. Things will change, everything will end.
But the time horizon of that adaptation,
Mhm.
whether it is 1 year, 2 year, or 3 year,
Mhm.
I know if it's going to come, tsunami is going to hit.
Mhm.
So why don't I pull out all my money from India,
Mhm.
keep it in the US,
Mhm.
let the tsunami hit.
Mhm.
India takes time to recover. And when it is 2 years, 3 years later, then bring my money back to India. Why can't I think like that?
It's very easier said than done, Sharan. How do you know the market will not go up 20% from now you take out the money?
Hmm.
And this, everybody knew, let's say the war goes on till 3 more weeks. 1 more month. There's a 70% chance that war will end in few weeks. There's a certain report which are claiming. Let's say I know that the war will end in 3 weeks. Okay, should I sell all my holdings today? Market is down 5% and I take out my money again. For example, it's easier said than done. You take all the mutual funds, you take all big fund houses, it doesn't operate like this. It's not like market can easily go 10% up from here and then fall maybe, or market can easily go 20% up. There's also a word coming up, there's a bubble cooking up in AI. Again, different school of thought.
Yeah.
Big bubble happening in AI. AI is not giving that much return. A lot of money is going into it. People are not buying. How many people buy subscriptions really, right? So it is not generating that amount of money. And
Yeah.
what if that AI bubbles comes up? Then India benefits directly because
Yeah.
we are underprepared in AI, right? That works for us. So I think having said that, sector rotation can happen. It's not that entire India will get impacted, and we'll adapt, and we're very good at adapting. I still believe in the India growth story. I think India will do really, really well. We might grow at a decreasing rate. For example, let's say the war goes on for a couple of months, then 0.5% in GDP growth we might suffer, and that's a big amount, right? But we'll still grow. We'll still be the fastest growing big economy of the world. And I think if you can generate, if you can find good sectors and good companies in India, I don't think so. Any place is better than in India currently to be invested in, with especially certain valuation. With last 2 years, 1.5 years, really no major return has been made in India. So I think we are close to 20p 1 year forward. So I think let's say 5% more fall. We come to 89p.
Yeah.
That's a good time to deploy money in India. And I think
because right now it's painful. You're saying deploy more in the current situation.
Exactly. When there is fear in the market, in the street, you have to put in money.
Deploy
when
more.
It's painful, then only you put money. Money
So
is not
would it be a good idea for people to sort of move their money from commodities right now and put in the equity market? Because commodities have already rallied.
Yeah.
And equity markets are suffering. So is there an opportunity to rebalance right now? Move from, because a lot of people have bought gold and silver. Right? Should they sell that and bring it here to equities now? What is your opinion?
No, as we have to stick to our asset allocation. So I believe everybody should have 10 to 15% of their money in gold.
हाँ, लेकिन अभी ये गिर गया ना. Equity has fallen. So that has gone up in terms of my asset allocation. So maybe do some rebalancing.
Rebalancing is okay if you're sticking to your asset allocation, but just don't sell off all your gold and silver and put it in equity.
Of course.
Asset allocation रखना है. मैंने बेचा. Let me give a very interesting statistic for silver. If you're talking about silver now, silver में बहुत trade हुआ. Trader ने बहुत पैसा बनाया. You look at silver chart. Okay. 5 बार $72 पे आके सिल्वर ऊपर गया. 72 लेवल पे आकर 5 से 6 बार. That's the big support. $120 से silver fell to around 40% in couple of days that the major crash happened.
Right.
Again it bounced back from 68, 69, 70. एक बार 67 गया, but again 72. 5-6 times in the last 3 months. So it's a great play for tactics. So I don't allocate my, I don't see silver as my part of my portfolio. But I see silver as tactical allocation.
So right now, how much percent of your money is in silver?
Should be around 7-8%. And I'm sticking to it. Yes.
7-8%?
Yes.
So it's like a tactical play for you?
Yes. So
And
all my play money is there right now.
And how much percent of your money is in China?
Should be around again 7-8%.
7-8%?
Yeah.
So
that's my equity portfolio. Of the equity portfolio.
Of the equity portfolio?
Yes.
But on your overall portfolio?
Should be around 5%.
5% is in China, 5% is in silver?
6-7% is in silver, 5% is in China.
This is on your overall portfolio level?
Yes.
And I'm assuming you don't have a house, you don't have a real estate. You have... No.
I do. Okay, I do have a house because, at 30 we have different aspirations, at 40 we have different aspirations. So when I thought I was financially free and I need to have a house to settle on, but I don't count that as part of my portfolio.
So after you became financially free, you bought a house?
Yes.
So at the age of 35?
36, 37.
And how did you buy? Through a loan or you bought it outright?
Took a small loan from family and friends, paid it off, done.
Acha, okay. So, but why from family and friends? You're already financially free.
But I do not want to take my money out of my equity
Acha.
and then put it there. So yeah, I did that. Yeah.
Wow. So you took interest-free loan from your family and
I
friends.
had that opportunity to do that.
And then you bought and you paid them back with your stock market corrections.
Absolutely. Bang on. Yeah.
Perfect. Dr. Vinny, now let's go to the rapid fire round.
Sure.
I will ask you some quick questions and I want some quick answers. So the first question is, one sector in the Indian market that is looking really exciting right now for the next decade.
Hospitality.
Okay. One sector in India that looks very overheated right now.
That's a good question. Defense.
Okay. Really? With the war situation, you're saying defense
Yes.
is
You talked about a decade experience, right?
decade.
From a decades, yes. For a couple of years, short term, maybe.
What if there is World War III?
What if there is no Trump tomorrow? Yeah, things change. Yeah.
If World War III is happening, then put all the money in defense companies, right?
Correct, but I don't think so. World War is coming anytime soon. I think this is very tactical. What's happening currently, the war situation. It's everybody knows it's the oil play, and I don't think so. The wars can last for more than months. Russia and Ukraine is a little different, but I think these are very tactical bets. Gone a little wrong, but I think this should end because it will end badly for everybody if it keeps going on.
Yeah.
So yeah.
If you had to choose Nifty 50 or the Nifty mid cap for the next 10 years, what will you pick?
Nifty mid cap every time. Just because of the time frame that you've given me. If it would have been 3-4 years, I would have definitely picked the bigger index, the Nifty 50. But yeah, 10 years,
mid cap.
Yes.
The biggest risk to the Indian stock market for the next 2 to 3 years?
Trump.
One type of stock you would avoid buying in the current market cycle?
Oil and gas.
One financial metric investors should stop obsessing right now?
P ratio.
One financial metric investors should pay more attention to?
That's easy. PEG. You divide the P by the growth of the company. Yeah, so you get a better metric to look at a company.
One investment theme that could define the next Indian bull market?
I think the theme or the trend is premiumization, as we spoke about. And a lot is happening across all sectors. So I think this should be looked at.
Basically, middle class becoming upper middle class
Yes.
and they want to upgrade their life.
And that's what is happening in India. If we have to become a $5 trillion, $10 trillion economy, the per capita income needs to increase. People will spend on more premium things.
Indian markets versus US markets, where would you put your fresh money today?
Indian market. And some China.
Perfect. I think that was the last question, Dr. Vinny. I think got a very, very fresh perspective in terms of how should asset allocation happen. And was really very enlightening to hear about your individual stock picks. Because I think that's a testament to the fact that if you want outsized returns, you better be ready to put in the hard work and the research. And I'm sure you read hundreds of pages every week,
right?
Probably every day. And I think being a professor helps.
Yeah, it does.
And any last words you would like to share before we end the conversation, Doctor?
I think when every college student starts to make money in the market, I think it's time to sell. That was what was happening a couple of years back. And then 2025 happened. Nothing was made. So when money making becomes so easy, you need to be careful about it.
Yeah.
It's not that simple to go and buy a stock when everything is rising. People think we've become good stock pickers. It's not like that. You need to be smart about it. You need to pick the right stocks. You need to do a little bit of research. AI helps now. AI really helps. You can, outsource all the dirty work that you call, the difficult thing, the researching thing, you can outsource it. And that helps. So yeah, money making is not easy, but it's not that difficult also. Just be a little consistent, do a little bit of hard work, and you can reach to the sky.
And Dr. Vinny, as a request from you, would you like to nominate somebody for this channel as a future guest? Somebody you think who's very deserving to come here? Somebody who you really look up to?
There's a trader called Akshay Sahani. He's a retired trader. And he's a very, very, he's a genuine person. He should be a guest on your channel. if he's okay to come, of course.
Do you have his number?
I do, but yeah, I will share it later on.
Maybe you can share this video with him.
I will do that. I will do that. Yeah.
Thank you so much, guys, for watching till the end. If you are somebody who is struggling with your finances and you're looking to get professional help, there is a form that I've put below. Please click on it and fill it, and somebody can help you with your finances. On that note, guys, please share any feedback that you had on this conversation, any extra questions that you felt like I missed out on asking, and please drop them down below. On that note, I'll see you in the next one.
Before you go, guys, if this video gave you even one insight and made you feel differently about money, don't just keep it to yourself. Share it with your friends or family member who could use it too. And if it has sparked a new thought or even made you disagree with me, drop a comment below and tell me why. Your critique helps me make this conversation sharper and more useful for you. As long as you have me subscribed, I'll make sure that you walk away with one new thing every Wednesday and Saturday.